Is it on? Okay, there we go. Hello. All right, there we go. Is it on? Okay, there we go. Hello. All right, there we go. Is it on? Okay, there we go. Hello, ladies. I'm going to give everybody a couple of minutes to hop on so that the people who are going to join the live as it's going on will be able to just hop in now. So I'm going to wait probably 2 more minutes until it's 9:05, and then I'll start chatting. How's everybody doing today? You feel free to just, write me in the chat box. Let me know how you're doing. Hi, Charlotte. Hi, Bobby. All right. Is it Kibonin? I don't want to pronounce your name wrong. If I did it wrong, let me know. Or if I got it right, let me know that too. Hi, Eunice. Okay. How's everybody doing? How is your week ending off? We're already at Thursday. This year is just like flying by like crazy. I feel you. It's been a very, very long day. It's been a long year, let's leave that out there for sure. Amen, Linda. Amen. Hi, Adora. Love the way your name is pronounced and spelled. So beautiful. Okay, I'm going to give one more minute and we'll start at 9:05. I am super excited to be speaking about finances because obviously that is my forte. I love all things finance because I do believe that achieving financial freedom should be a goal that each of us aspire to do. Life is very, very short, as this year has taught us. So being able to be more flexible with our lives and being able to do things that we really love with our time, like spending more time with family and traveling or starting a business to impact the lives of more and more people. All of that starts with your finances, right? When you're financially set, you can do whatever you want for the most part. Things get difficult when you are not financially set. So today we'll talk all about how to assess where you currently are, right? That's very, very, very important. Before we go into making goals or stating that we want to, own a house, own a building, invest or something, or start a business, each of these changes in our financial lives starts with us first understanding where we are. Because as we'll go in through our presentation, a lot of times people are hindered from development because they are not able to take advantage of opportunities that may come. There's this quote that many of us probably know is like, we don't want to get ready, we want to stay ready, right? So I just love utilizing that as motivation to make sure that at any given moment, your financial life should be in check because we want to stay ready. If y'all agree and y'all ready to get to work with this workshop, I want you guys to type in the comments, stay ready. We're going to stay ready, right? That's the goal. Yes. Okay. Since everyone is pretty much here, yes, Adora, stay ready. Want to stay ready. That is literally the goal, staying ready. So for those of you who do not know who I am, I'm just going to start by giving a very, very brief introduction. So I am one of your coaches here. Linda is amazing. I'm happy that she put together this because it's important for us as women, as people in general, to be able to have community spaces where we can share our expertise, our knowledge, and help each other build, right? There's things that I know that you guys may not know, but there's a lot of things that you guys know that I don't, because I'm just an accountant, right? So the goal is to just make sure that we are sharing, right? As I say, it takes a tribe, and this is what we have here, a tribe. So I am very honored to be your financial chief of the tribe, right? So we're gonna get into it. So I'm Shania Wilson, AKA the People CPA. I am a certified public accountant in the state of New York. I have several businesses. My main business is my baby, Fola Financial, where I provide tax, bookkeeping, financial services to entrepreneurs, creatives, small business owners, and professionals also. I am also a PhD student at Rutgers University studying accounting information systems. I am also a real estate investor and just dip and dabble in other little businesses also. I'm very passionate about finances, so though it may sound like I do a lot, everything that I do is aligned with my purpose, and that's being able to teach finances to my community in the way that they can easily comprehend it, because the goal is to get everybody in the momentum of building generational wealth. Because though it sounds, far-fetched, like, all right, generational, that word itself sounds like it's a long time to get there. What we do now every single day is laying bricks, brick by brick, to build these walls that eventually will build our house so that we can achieve financial independence and create the lives that we really, really want. So again, the purpose of today's conversation is to talk about staying ready, right? How do we stay ready? We have to figure out how well we're doing right now. So assessment is very, very important. By that, I mean understanding your income streams, what your expenses are looking like, but then also your goals and how close or far you are to achieving those things. So I'm going to share my screen. And we'll get started. So we're gonna start it off with some basic questions. And once you guys see my screen, I am going to ask that you participate by commenting in the chat box when the questions come about. So today's presentation is going to be very interactive. I love talking, but I do find that, as a professor, because I do teach at Rutgers University also, people understand things more when we, feel it. We have to be interactive. So I'm going to share my screen now. Perfect. Okay. So before we get into assessment, I just want to go ahead and discuss some basic facts. So number one, 76% of millennials in this country lack basic financial literacy skills, right? Very scary facts. Actually, give me 1 second. I need to make sure I can see you guys in the chat box also. So let me pull that up. Let me stop share for 1 second. I want to make sure that I can talk to you guys and chat at the same time. So give me 1 second. Okay, got it up here. Here we are. Present. Share screen. Okay. You guys know, we had to pivot with utilizing technology since we're still kind of sort of in quarantine, I guess. But I got it. So here we go. So again, 76% of millennials lack basic financial literacy skills, right? And that's just in the United States. As you could imagine, if we think about worldwide, that percentage is probably a lot higher, especially because the US only makes up a fraction of the total population in the world. Another scary fact is that most Americans have less than $5,000 saved, right? that may not be a bad thing. If you're like, all right, well, what if I'm, 15 years old, 16 years old, 21 years old, having 5K in the bank is super okay, right? But again, I said that most Americans. So imagine the people who have families to support, like most of us do here, averaging $5,000 in savings. We'll talk more about this later, but again, if our goal is to build generational wealth, that's not adequate, right? If we want to go ahead and purchase a home, there's many programs that give you down payment assistance, where you will pay low to no down payment. However, it's not about just buying the asset. What if you have to improve the asset, right? You have to dip into your savings account. What if you have to buy furniture? A bedroom set could run you $1,000 just for a bedroom set, right? Let's not get into the TV, the dining room. So to be able to comfortably move and make these boss moves in your life, having around that much in your savings account may not be adequate. So at this moment, there's this book that I really love. I'm going to type it in the chat box also. It's called The Richest Man in Babylon. If you guys haven't read that book already, I do recommend that you guys get it. You ladies, I'm gonna stop saying guys, because we got into the habit of saying that. You ladies, get this book, The Richest Man in Babylon. In this book, he teaches this principle that you should, at a minimum, have 10% of your income saved, right? So if you think about it, and this is where we're gonna get into a little bit of discussion, how much have you been making? Don't write in the chat box this part. This is personal, right? But think about if you take your salary over the past 5 years, right? So say, for example, I made $50,000 a year. The principles in that book tells us that we should at least save 10% of our income. So over these past 5 years, I should have $25,000 in my bank account saved up, right? Sounds good in theory, but most people do not apply this principle. If you think about it, 10% of $1 is not a lot. Like, it's just 10 cents, right? 10% of $100, that's just $10, right? So even though it sounds like a small percentage, if you apply this one principle of just getting into the habit of whenever you get money, so your paychecks, if you just get money from gifts, like it's your birthday, even if you splurge on yourself, go ahead and splurge. We all deserve to splurge. We work hard. These coins not earn themselves. We work hard for it. But get into the habit of, at a minimum, saving at least 10% of your take-home income, right? So there's this concept that we call paying yourself first. Many of us, we get income, and as soon as we get our paychecks, we're paying our mortgage or our rent, we're paying, our childcare expenses, we're paying for groceries. Let's reverse that cycle, right? The order should be, here's my pay, here's me, because why not? You are the one who earned this money. So at a minimum, from your top pay, 10% off the back should be right to your savings account. The rest of that money is what you budget, right? So yes, Adora, please, ladies, if you guys can all comment and say that I will pay myself first. Paying ourselves first, all 2020, 2021, and the rest of the years to come. And again, utilizing that the 10% principle will get you far. Many of us, make around 50K a year, or maybe more, maybe less. But again, if you apply that principle for over 5 years, you are well above this less than $5,000 mark. And we live in a very expensive country. You guys live in New York and New Jersey like myself, it's very, very expensive. But again, get in the habit of paying yourself first. So again, I would say that whatever you take home in your net pay, so your gross pay is like your salary, but we all pay taxes, Medicare, FICA, we may have some 401k contributions. Whatever your net is after that, your state taxes, maybe some medical, health insurance expenses. Right after that, we are going to pay ourselves. Again, how much? At a minimum, 10% of our next take-home pay, okay? Not a lot. Think about it. Just 10%. 10% goes a very, very, very long way. And yes, New York. Yes. Okay. So here's a couple more facts. 78% of Americans, and this is not just millennial specific, 78% of Americans live paycheck to paycheck. This fact is very scary to me, especially because you think about New York, right? People here, we have maybe the highest salaries in the country. However, our cost of living is very high also. So even if you make 100K, actually, there was a stat that said to live comfortable in New York, you need to make around $240,000 each year. Listen, I have a lot of family friends in New York. Maybe I can count on maybe just 2 fingers, people that I know who even make close to that. Like, that's very unheard of, you know? So to understand that fact, because the cost of living is so expensive, this is again why it's so important to make sure that you are not caught up in the living paycheck to paycheck cycle. If you live paycheck to paycheck, you are creating no room for you to save and grow. And again, we create wealth through the use of investing. Investments, I mean in yourself, and maybe that's real estate, that's stocks, that's real estate property. We cannot do those things if we are living paycheck to paycheck. We need to at least have some room to save, right? However, if somebody can say, well, I live paycheck to paycheck, but I paid myself 10%, and now I'm net zero, that's perfectly fine. As long as you are allocating some of your income to save, if you break even every month, like, all right, you know, maybe I take home $4K a month, my rent is $2,000, I pay about $600 in bills, $400 for food, pay myself $1,000, I broke even. That's fine, because again, the most important statement that I said in there, again, is paying yourself. And oh Lord, student loans, don't get me started with these student loan debt, right? So with student loans, since you guys brought that topic up, I just wanted to state that this is just from my opinion. Again, everybody's different. I would never recommend any of my clients to prioritize paying off their student loan debt unless it's hindering them from obtaining an asset, right? So if you can, even though what you really want to do with the student loans is like create a plan to knock them off one by one. And I'm gonna tell you guys why. Interest is the devil. It's the devil right there, right? So it's like if you're paying on your total balances every month, you're not really smacking down that principal, right? It's easier to divide and conquer, especially with student loan debt, because again, interest rates are very, very high. Thank God, and I'm gonna mention this because we're still in COVID, so if you guys have federal student loans, your interest actually stopped accumulating because of COVID. This is the perfect time that if you can, I would smack those loans down. Like, you know, if you have, you know, a loan for $2,000 and you have that comfortably, I would smack it down, because guess what? Once COVID is over, your interest will start accumulating again. Interest is the reason why many people never pay their debt down. You know, it's like you're paying, turn around, principal is untouched. You still have this huge debt, and guess what? Interest gets accumulated from the principal. So even though you're making these interest payments, your interest payments are still being added on from the principal. If you're not attacking your principal, you are not moving your debt. So again, I would only prioritize it if you can, but the goal is to make sure if you can create some extra income, you can knock those loans down, right? So with some of my clients, I recommend that instead of trying to pay off your debt quickly, let's buy a rental property, you know? Let's save up, get a rental property, have that income, pay our debt down. So it's like now our money did not go to paying our student loan debt. That's not where it went. Our money that we worked hard for, slaved for, sweated for, went to us purchasing an asset. How good does that feel to say that I spent my bag on a building as opposed to I spent my bag on student loans? Like, yeah, I feel good because it's over, but I could have got something else with that, right? So this comes with very strategic planning, but it's possible. It's super possible. So you guys are so funny. So somebody asked about student loan forgiveness. So I'm praying to God that they do this, because student loan debt and consumer debt, well, consumer debt is like you get yourself into that. Student loan debt, we are kind of forced into it, right? Because this American country is like, we need higher education. You can't even get a job if you don't have like a master's degree most times nowadays. So it's like you're forced to take out debt. We cannot afford $100K in tuition, right? So I really do pray that they do pass that. They are still talking about it. Some states are trying to push it, but federal is still in the talks of it. So we're going to pray together that that gets passed, because I know I'm trying to get rid of this debt also. And yes, Adora, we want the building. Student loans can wait. We want the assets. You want to have your assets pay for your liabilities and not your earned income pay for your liabilities, right? Earned income, we pay for our expenses, our housing, our food. But liabilities, no. My assets are going to carry that, you know? Because now we're going to kind of work on our balance sheet. We'll get into this a little bit later also, but just knowing how those things are different, and how understanding your profit and loss statement and your balance sheet can change the trajectory of your financial life in totality. You guys are amazing. Yes, yes, yes. So another scary fact, which is the last one I will discuss, is credit card debt, right? This bothers me, because I'm like, all right, how can the average credit card debt be $16K, but then most Americans have less than $5K? So basically, we're saying that most Americans have a negative net worth, you know? If we talk about your net worth, that's your total assets subtracted by your total assets plus your liabilities. Well, your total assets equal to your liabilities plus your equity, right? So if we don't have much assets, cash is an asset, buildings are an asset, you know, different type of assets like paintings, those are assets, because if we cash them out, we can get paid for them, right? Liabilities, student loan debt. Unfortunately, if your mortgage is not making you more money than you're paying out, that's a liability also. But most Americans have a negative net worth. Most minorities, unfortunately, have a negative net worth. So we need to start assessing how we look at our balance sheet. I bet if people saw the negative, so basically if you can say that a person has an average of 5K, saved up, yay, great, but 16K in debt, you're negative 11K in a hole, you know? It's not a good thing. So being able to, again, assess where you currently are is very, very important. So again, so when it comes down to actually saving, I love this quote. You don't want to save to save. You want to save to invest. Saving to save is going to get you maybe around, on a good year, 2.5% if you go with the very high yield savings account. I'm going to drop in some in the comments. There's like Allie. There is the Goldman Sachs Marcus by Goldman. If you guys are not taking advantage of high interest savings accounts, you need to do that right now. Now I'm gonna tell you guys why. Honestly, saving to save, it's a lose-lose either way, because I'm gonna tell you guys why right now. So there's this rate called inflation, right? To be completely honest, most savings accounts are nowhere near close to that rate of inflation, meaning that every dollar you leave in your bank that's being saved, it's not even worth what it will cost to purchase something with that same dollar in the next year. Because inflation is higher, and for most accounts, you'll be getting maybe 2.5% annual percentage rate for your savings account. And that's if you get a high interest savings account. Banks, they're giving you maybe 0.1%. 0.01%. Inflation is like 10 times that, you know? So again, yes, we have to save to save. I do believe in creating an emergency fund. I do believe in having an investment saving account. So whenever you have a goal, have an account that's specifically for that goal. Very, very, very important. Because after our emergency fund, the next money that we get to save should be going towards some investment, right? Because again, we want to build wealth. We don't build wealth by having our money in our bank account. That's not how it happens. We build wealth by focusing on our balance sheet. And that's every item. Cash is just one item on your balance sheet. Real estate property, another item. Businesses, another item. Maybe some intellectual property, another item. Artwork, another item. So again, focusing on how do we increase our balance sheet, because guess what? Your bank account does not dictate your net worth. It's your balance sheet, right? So it's very important to just understand this concept. You want to, and I'll show you guys a little chart that I have here. But again, you want to make sure that income that you earn is going to invest in assets that generate you income to pay your liabilities. Because eventually, once we're done paying off our liabilities, that income from our assets are going right back into our pocket, right? So that's the goal, to just make yourself, my friend has a great book, I'm gonna type it into the chat. It's called Bank on You. His name is Jeremiah B. Amazing guy, super, super intelligent. And he teaches you how to set yourself up to basically be your own bank. That sentence sounds so like out of the world, be your own bank, what does that mean? But if you have assets to draw from, the same way you can go to your bank and ask them for a loan, you can take a loan against your assets to continue to fund whatever you want to do to help continue to build wealth quicker. So again, you want to bank on you, not bank on the bank. We have to start moving away from depending on the system and creating our own financial cycles, right? So again, from your income to your assets, we can create that for ourselves. We shouldn't be depending on the system to give it to us, because to be completely honest, wealthy people create their own financial ecosystems. So we should be able to do the same exact thing, and we can. Okay. So how do we stray away from falling into being one of those statistics that I just mentioned, right? Number one, what we want to do is create a budget. People are like, all right, I don't want to, manually write down a budget, or, I don't want to create an Excel template to make a budget. The thing about having your budget in front of your face is that it may scare you to see how much money you actually spend. So I know for myself, I took my finances a lot more serious once I looked at my bank statement. What I did was highlight each major expense in different colors with a highlighter. So I'm gonna write this down in the chat. So what you want to do is go through your bank statement with the highlighter. If you can get multiple colors, that would be great. What you want to do is highlight things that are necessities. So how much are you paying for rent, for utilities? Wi-Fi is a necessity too. So highlight that for necessity. We need Wi-Fi, especially now with COVID, right? Highlight your necessities, and then highlight things that you indulge in but don't necessarily need, right? So for me, it was eating out. I highlighted all of those at once because guess what? We could go grocery shopping. Groceries are a need. Eating out is a want. Put that out there. You guys may hate me for saying that because I love brunch. I love this. Eating is a necessity. Groceries are a necessity. Eating out at restaurants, that is not a necessity. That is a want. You want to do that, right? Highlight all of your meals that you spent outside. Also, I want you to go through your statements and highlight how much you spend in transportation. And I mean both vehicle expenses and then Ubers. So I did this for myself and a couple of my friends, and it shocked me and bothered me that for 1 month, this was like a month last year, I spent $600 for the month eating out, and I spent $400 in Uber. If you multiply 400 by 12, I'm spending basically almost $5,000 for the year just for Uber. They should cut me a check at that point, right? Because it's like, you guys obviously are using me. And then spending money on eating out. So my brunches, like, it sounds cheap, $25 plus unlimited mimosas for $20 extra dollars, $45 for brunch. And I'm like, wow, I spent that much on eating, so I don't have to spend money on brunch every weekend. There's nothing wrong, and I want to be completely clear, is that there's nothing wrong with treating yourself. It's just prioritizing what you really want. If your goal is to live a lavish life and just like splurge on yourself and not have no assets and just, be broke all the time, that's cool. What should I do? But if you're serious about building wealth, if you're serious about building generational wealth, it's important for you to prioritize your financial life. So what are we doing, So I love food too. And ladies, to be completely honest, when you guys do this exercise, highlight how much you spend to get your hair done, Also highlight how much you spend to get your nails done. Over COVID, I saved over $400 just by not getting my nails done. And, I'm going to actually stick to just being like this because I like saving money. And I'm like, you know what? I don't need it that much. We don't know when it's going to end anyway. So I might as well just like keep my nails off just in case. But you get addicted to the money that you save once you really realize that you can save it. So if I can cut my Uber bill by half and spend $200 a month on Uber, if I can cut my meals by half, spend $300 on meals, I'm saving an additional $500 per month. That is basically $6,000 extra for the whole year that I'm now saving, right? $6,000 when I told you guys that the average American doesn't even have $5K in their account. That is huge, right? And again, that's a small amount. $500 a month save $6K is not really much, especially if it's not coming from you generating anything else. It's just from you cutting down some of your expenses. Secondly, right, Adora is like, all right, $500, that sounds like a little bit, but $6K for a year, sheesh, it's a lot. With $6K, that's a down payment on a $100K property. You can buy a property with that money, right? And again, the goal is to save so we can purchase assets. Secondly, yes, Charlotte, same thing. Hair, I just got my hair dreaded because I'm like, I need to save some more money to get my hair done. So I'd rather pay a one-time fee to get it dreaded. I can style it myself over and over again, but at least I'm not going to go back into paying $300 a month for my hair. Yes, it's ridiculous. I know, don't judge me. $300 a month for like my weave, getting it installed. Listen, again, I got addicted to saving money because of COVID. Super addicted. Okay. So the next thing, there's two ways to tackle how much extra we save every month, right? One piece of it is figuring out how much we can save from cutting back on expenses. However, that may not be the only way, and it never is. Because if you can't earn extra income, why not? Why, change your life drastically if you don't have to? So I always ask people if they have an extra skill, maybe a talent or a hobby, because in this age nowadays, you can monetize anything. I want you guys to all know, I want you ladies to all know that you are a walking asset. I want you guys to write that to me in the chat. I am a walking asset, period. Add the period at the end of it too. I am a walking asset. Now I'm gonna tell you why. Each of you here has some special skill, some hobby, some talent. Even if it's from the work that you do at your day job, there's ways to monetize your skill. You don't have to start a business and like take on clients. You can create extra income by teaching your skill. Even if you're selling, 5 courses a month at $50 a month, at $50 a month per course, whatever. That's still an extra $250 in your pocket from just monetizing something that you already do. Because again, you are a walking asset. So literally learn ways to monetize your talents. I was an accountant, so like my skill that I learned from corporate America is what I utilize to form my business. I have clients that worked in HR that learned that companies lack HR functions. She created a business that niched down to entrepreneurs and allowed them to outsource the HR function. Whatever you're doing, I'm letting you guys know right now, you can monetize that skill. If you don't want to do the work, you can create a course and sell that skill. If you don't want to do that, you can write a book about that skill. People want to hear from experts. And if you've been at your job for 10, 15 years, you have something to say. You are a walking asset. So please know that. Again, we want to make sure that we are saving a lot more, but let's make a lot more, because why not if you could do so, right? I am a walking asset, period. Yes, Shonda. I love you, ladies. Y'all giving me life tonight. Y'all giving me life. So lastly, there's a bunch of technology that you can utilize to help you with saving. There's Acorn, there's Digit, there's Mint. I will drop these also in the comments right now. If you're somebody who's super busy and you may not have time to run through your statements, to pull out from your savings account, you can utilize some of these apps to help you. Another, it's supposed to be Robinhood. I put Robinson, sorry. Another way to help you save more is, this is actually the best trick. Please write this down. To save more without you having to physically do it, what you want to do is go to your employer, right? When you fill out your direct deposit form, there's a little piece that asks you what accounts you want your money direct deposited to and what percentage do you want to each account. I tell my personal finance clients that what you want to do is create a savings account with your bank that you are not going to touch, period. Go to your employer, refill out your direct deposit form, and allocate what number? You guys can guess it. Allocate 10% of your net pay to that savings account and do not look back. So now when you get your direct deposit in your checking account, you're gonna just operate off of that money. But what did you achieve? Paying yourself first. You achieved that already. So whatever you spend after that is whatever you spend. That's cool because you did your job. You did your duty already. We paid ourselves. So we're good to go. 10%. Yes, Winnie. Yes. Okay. So there's a quote by Jay-Z that I love so much. And he states that if you can't buy it twice, you can't afford it. So even when it comes down to like buying certain assets, I recommend my clients, like, you don't want to just save just to buy that asset. You never want to save for just a goal. You want to surpass that goal, because once you pay that money, you don't ever want to be uncomfortable, right? Again, the goal is not to have to get ready. We want to stay ready. What if you buy that property, spend your whole savings, and now somebody came up to you with a huge opportunity to help you 10x your income? If you don't have the money to put down, you will miss out on it. So again, whenever you're saving for a goal, I will always try to double my savings goal for that specific purchase. Sometimes with a house that's super, that's out of reach. If I have to save down $20,000 to buy a house, I would say maybe just half that. So save a total of 30, but never put yourself in a position to start from zero again. We gotta stop doing that. Have to stop. We wanna always be ready so we never have to get ready. Yes, Linda. So lastly here, this is the cash flow quadrant. So if you guys haven't read this book, all right, how about this? I will give a free 30-minute consultation to somebody who can tell me where this cash flow quadrant comes from. Now I'm gonna give it a minute. See who answers first. Don't cheat. Who knows where this cash flow quadrant comes from? You guys are so funny. The comments. Wanna wait. Okay. So if you guys don't know, and I hope nobody didn't type in the chat box because it is a little bit delayed. This cash flow quadrant comes from this book. It's called Rich Dad, Poor Dad. Yes, Kanisha. Somebody, right, Kanisha, make sure you DM me on the side. I'm gonna save your name. You got it. No, trying to cheat, Linda. You guys are so funny. Oh my God, guys. So yes, the book is Rich Dad, Poor Dad. If you guys have not already read this book, put this again. So I recommend like 3 books always. It's Rich Dad, Poor Dad, Richest Man in Babylon, Bank on You, period. Rich Dad, Poor Dad teaches you the basis of understanding how to win in this world when it comes to finances. Richest Man in Babylon gives you the principles on saving. Bank on You teaches you how to bank on yourself, right? So this is the cash flow quadrant. Here's a breakdown of what this actually means, right? So in order for you to like really build a system of wealth for yourself, a financial infrastructure for yourself, your financial life, here's how we have to look at it. We have employees, you know, we make money from our job, right? Having a job, and as an entrepreneur, I never tell people, oh, quit your job, you know, start your business. It's hard out here when you're an entrepreneur, right? Especially when you're trying to buy a house, like verifying your income is such a hard process. So if you can, hold on to your job as much as you can. But we want to make sure that we are utilizing what benefits we have from our job as much as we can. If you guys are not already maximizing your 401k match, please do that. And I'm going to tell you guys why. Maximizing on your 401k is a tax strategy as much as it is a retirement savings plan. When you make 401k contributions, you can get a tax deduction for those contributions, but then obviously if we're maximizing that, our company is contributing that same amount to our 401k, and we're expediting our way to build wealth for retirement. So if you can maximize your 401k, maximize that bad boy, for sure. So then there's like the self-employed people. Self-employed is like, all right, you know, you own a job, right? So you are working for yourself, but that's what you're doing. Like myself, I'm sorry, unfortunately, I'm stuck right there, self-employed. When I mean you own a job, it's like you're working. You don't have employees yet. Most of your time is invested into your business. Then we have business owners. This is when you create a system that works for you. The goal is to go from self-employed to business owner for sure. However, you can be an employee and a business owner at the same time. But the real bag is moving into this I section, right? Being an investor. This we can achieve in any of these quadrants. So whether I'm an employee, whether I'm self-employed, whether I'm a business owner, if I'm an investor, I'm winning, period. Why? Because at this specific stage, your money is working for you. And that's what we want to be able to. Warren Buffett has this quote and says, if you're not making money in your sleep, you are never going to build wealth. Why? Because working is equal to us giving away time. When you are an investor, you are no longer giving away time, but you're still making money. I'm gonna let that marinate. You working, whether it's at a job or being self-employed through your business, is you exchanging your time for money. You being an investor is you just making money from not giving away none of your time. Your money is working for you. This is how you build wealth. So again, we don't save to save, we save to invest. That's always the goal. And then speaking about investing, this is the last part of the presentation. Thank you so much, Winnie. This is so much fun. You guys are actually making this very, very fun for me. Having a good time over here. When it comes to investing, as I stated earlier, this is how we want to tear it down. We want to invest in ourselves. first and foremost. How do we do that? Education is key. You don't ever want to go into something blindly ever. We are past that stage. We have Google and YouTube University. So your first investment, whether you have to pay for a course, pay for a coach, whatever you gotta do, invest in yourself. You want to be able to move into making these investment decisions with knowledge. If you don't understand what you're going for, you'll fall for anything. And you don't ever want to be in that predicament. So again, invest in yourself first and foremost. Right after that, it's like the stock market, right? When I say the stock market, that's inclusive of your retirement plan, because essentially retirement plans invest in the stock market, they grow, you cash out when you retire, right? 401ks, HSAs, you can invest those as well. But you want to have your money in the market. Why? On average, the market does about 12% per year. Again, I told you guys that the bank accounts give you maybe 0.01, or a good high yield savings may give you 2.5%. Why not put my money in a place where I'm going to get a tax deduction from saving it, number one, but then also it may grow on average 12% per year. That's a lot. So think about it. If you contribute to an account and you have 100K, and then the thing about investments is that there's this thing called compound interest. So as we stated with student loan debt, when you're paying your debt down, it doesn't go nowhere because you never touch the principal. Investing gives you that same effect oppositely. So not only is our principal there, the interest that we earn on our principal, which is our initial investment, gets included on our next interest calculation. So it's compounding. So we're making money from our money that's making money, basically. Then we have real estate. Again, everybody's gonna need a place to work and to live. So commercial properties, residential properties are always gonna be in, because no matter what you do, where we go, we are going to need a place to, you know, to live and to work. So why not have some properties on your balance sheet? Lastly, investing into an actual business, right? Or other assets like paintings or whatever it may be. But again, assets are what's going to be added as a positive statement on your balance sheet, which is going to increase your net worth. The goal is net worth increasing. They say your net worth is your net worth, right? But how about you? You are your net worth, you know? You, your decisions, your mindset, your habits, that's your net worth, you know? Network is cool and all, but what if my network is broke, you know? I got broke network, but me, myself, because I'm so invested into myself, I'm still gonna have a positive net worth. And on that note, I am going to conclude, because I want to leave 10 minutes to answer some questions that you ladies may have about assessing yourself, right? So again, we recapped figuring out how much you're saving, and then where you're saving, where's your money going to. Well, I didn't touch on this credit, but I think we do have a special presentation just on credit coming up soon. But if you guys have questions about that, just let me know. So again, the floor is open. Feel free to write in the chat. It's a little bit delayed, so like if I take a little bit to answer your questions, just know that it's the internet and not me. But drop your questions down. We have 10 minutes. I do want to make sure I answer your questions before I hop off in a little bit. But again, thank you ladies so much. You guys were an amazing, engaging audience. This was so much fun. I'm gonna drink some water. So feel free to drop your questions in the chat box, and we can talk about all things finance, assessing yourself, saving, going through your statement. Hey, Melissa, thanks for joining us. Oh, thank you ladies so much. This was so much fun. You're so welcome. You ladies are so amazing. This was so much fun. To have it be virtual and make it feel like I was with you ladies was like a blessing, because you guys made it so fun. I felt like you guys were here with me in my little corner in my room. This was so much fun. PowerPoint. Yes, I will, Shonda. I will share it. I will send it over to Linda, and I guess she'll distribute it to you ladies for sure. But yes, of course, the knowledge is here. I want you guys to like take this and, you know, go through it, think about it, but then also share it with your friends, like, you know, because what I want you ladies to do actually is, you know, again, we're a tribe here, but be a tribe outside of here also. So what I want you ladies to do is come up with your, you know, your 4 or 5 closest friends, and you guys can do a little Zoom date, right? And it's like a financial checkup. Do this practice with them and see who's see who's the worst spender. It'll be like fun and jokes. Do it with people that you can trust and that who won't judge you, obviously. But do this challenge with your friends. I would say give around 4 to 5 of your friends and have them print out their prior month bank statement and play the highlight game, right? See who spends the most on food, on eating out. Maybe not the last month because we've been in quarantine. But, you know, just play that game and see who spends on what and just open up a dialogue. I feel like the thing about finance is that people are so scared of numbers that we don't speak about it. And what we don't attempt to address, we can't ever fix, you know? So it's important for us to make our friends and family feel comfortable about talking to finances with each other. One of my friends told me that he was a foster child for a family, and once a month they sat down at the table and discussed their finances together. Like, all right, how much did you save this month? What did you spend your money on? Did you buy anything that's important? Did you buy a stock? What stock did you buy? How's that stock doing? We need to make finances a dialogue that's common, right? Because if we want to strive for wealth, we have to start implementing wealth strategies, wealth knowledge into our daily habits, right? Habits are what get manifested. So make talking about wealth, you know, creating affirmations about wealth, make that a habit. You know, let's manifest that. The same way we manifest our businesses, our ideas, our love life, let's manifest our finances. Yes, Linda, financial Zoom girls night. Okay, so Melissa had a question. Renting currently wants to acquire real estate, tossing ideas. Do I buy my own right now? Is it possible to buy and rent and use the cash flow to save up more? Ooh. So I think we have a special webinar specifically on real estate, I think, Linda? I think so, right? But anyways, Linda, Melissa, I want you to research this concept called house hacking, right? There's a concept called house hacking. House hacking is where you intentionally purchase a multi-family property for your first-time home purchase. Many of you ladies may have heard of the FHA program, First-Time Home Buyers Program. The thing about most people is that they make their first purchase a single-family home. Why not take advantage of 3.5% down and make our first FHA purchase a multi-family? At a minimum, it being a duplex. You can even get a triplex, you know, for a good price. And again, house hack. House hacking is where you're able to use your FHA, purchase your home, live in your home for free because you are going to get tenants that pay more than your mortgage. Even if it's $100 more than your mortgage and you're like breaking even every month, you're living now for free, AKA your income from your job, that's all in your pocket. My mortgage is taken care of, right? So it's called house hacking. Research that, yes, good job. I love Bigger Pockets. They're a great, great, great podcast. It's super great. But yes, house hacking is amazing. But I think we're gonna chat about real estate a little bit more. I think it's a really, really good concept. And again, wealth building is important. Real estate gets you there. The last thing that I'll say about real estate for now is that it is the easiest way to multiply your money. And I'm gonna tell you ladies why I said that. Think about it. If I could put down $10,000 to buy a $100,000 property, I just multiplied my 10K 10 times, right? Because when you have an asset, you can pull out equity against that asset. You can borrow against that asset. You can bank on your assets. So I just used that 10K to basically grow me to 100K. Because again, it's all about your balance sheet. Your balance sheet dictates your net worth. Never forget that. And on that note, I am going to say thank you, ladies, again for being so participative, engaged, just loving. I love this so much. Thank you all, all Charlotte. 40 years ago, I was in my mother was just, I don't even know what she was, honestly. She was a little girl, so I wasn't here yet, but I'm here now, Charlotte. And again, it's about the tribe. I'm here, so feel free to reach out to me. I'm more active on Instagram than I am on Facebook, but you can contact me through my website, FullLiveFinancial.com. Type in the chat box. But if I can help in any way with any free guidance or knowledge, feel free to reach out to me if I can. Thank you all so much. I love you all so much. Thank you, Linda. You're the bomb. And I hope you ladies all have an amazing night.